Imagine this. It's 1993. A man starts a small firm. He has a desk. He has a phone. Fast forward to 2009. That same man makes a personal profit of $4 billion in a single year. That is $4,000 million. It is a stunning number. It is hard to grasp. This is the story of David Tepper. His journey is a timeline of immense financial success. As of today, October 13, 2025, his net worth is estimated to be over $20 billion. He did not inherit this wealth. He built it. He built it with grit. He built it with brains. He built it by betting against the entire world and winning. David Tepper was not born into wealth. He was born in 1957. He grew up in the Stanton Heights neighborhood of Pittsburgh, Pennsylvania. It was a middle-class, working community. His father was an accountant. His mother was an elementary school teacher. He learned the value of hard work and education early on. He was a public school kid with a sharp mind for numbers. He attended Peabody High School. Even as a teenager, he was fascinated by the stock market. He began investing small amounts. He learned from his early wins. He learned, more importantly, from his mistakes. The seeds of his financial genius were planted in this modest, unpretentious environment. His formal education sharpened his natural talent. He first attended the University of Pittsburgh. He graduated with honors, earning a degree in economics. He wanted to compete at the highest level, so he enrolled at Carnegie Mellon University's business school. He earned his MBA in 1982. The school is now named the Tepper School of Business. His time there was transformative. It gave him the analytical tools. It gave him the theoretical framework. It turned his market instincts into a disciplined, repeatable strategy. He was ready for Wall Street. His early career was a steady climb. It was not a sudden explosion. He started as a credit analyst at Equibank in Pittsburgh. It was a foot in the door. He moved to Republic Steel in Ohio. These were not glamorous jobs. They were foundational. They taught him how to analyze a company's balance sheet. They taught him how to spot financial weakness. They taught him how to spot financial strength. In 1985, he got his big break. He was hired by Goldman Sachs. He joined their high-yield debt trading desk. This was the big league. He specialized in distressed debt. These were the bonds of companies on the verge of bankruptcy. It was risky work. At Goldman Sachs, Tepper quickly became a star. He was the head trader on the high-yield desk within 6 months. He was known for his aggressive style. He had an uncanny ability to find value in corporate wreckage. He focused on companies the market had given up on. He saw potential for recovery where others saw certain failure. But his path at Goldman was not without frustration. He believed he should have been made a partner. He was passed over several times. That perceived slight became the catalyst for his next and most important move. He decided if he couldn't become a partner at their firm, he would build his own. In 1993, David Tepper made his move. He left the security of Goldman Sachs. He took a huge risk. With a partner, Jack Walton, he founded his own hedge fund. He named it Appaloosa Management. An Appaloosa horse is known for its distinct spotted coat, standing out from the herd. The name was a nod to his contrarian nature. He started the firm with $57 million in capital. His office was not a grand suite in a skyscraper. It was a simple space in Chatham, New Jersey. From this humble command center, he began his assault on the markets. His focus remained the same: distressed assets. The core philosophy of Appaloosa was simple but powerful. Be greedy when others are fearful. He looked for moments of maximum panic. When a company was in turmoil, when an industry was in turmoil, when an entire country's economy was in turmoil, he and his small team would do deep, fundamental research. They would analyze the debt. They would analyze the assets. They would calculate a worst-case scenario. If they could still make money even if things got a little worse, they would invest heavily. This approach required immense patience and an iron stomach. Appaloosa's track record in its early years was impressive. Tepper navigated several market crises with skill. He invested in the debt of Enron. He invested in the debt of WorldCom. Everyone else was running for the exits. Tepper was calmly picking through the debris, buying bonds for pennies on the dollar. He knew that even in bankruptcy, there were valuable assets to be claimed. He made a fortune on Conseco, a failed insurance company. He made another big score during the Asian financial crisis of the late 1990s. He bought South Korean bonds when the country's economy seemed to be imploding. He was betting on recovery. He was right. The structure of his firm was key to its success. Tepper kept his team small and nimble. He did not build a massive bureaucratic organization. He wanted traders who were independent thinkers. He wanted analysts who could argue with him. He fostered a culture of intense debate and rigorous analysis. Decisions were made quickly. When an opportunity appeared, Appaloosa could deploy billions of dollars in a matter of hours. Deep research, contrarian mindset, rapid execution. It is how David Tepper began building one of the most successful hedge funds in history. The year 2008 was a nightmare for the global economy. The financial system was cracking. Lehman Brothers collapsed. AIG needed a massive government bailout. Fear was everywhere. Investors were dumping stocks, bonds, anything they could sell. For David Tepper, this was the opportunity of a lifetime. While the world panicked, he remained calm. He and his team at Appaloosa went to work. They believed the U.S. government would not let the entire financial system fail. They bet that the too-big-to-fail banks would be saved. In late 2008 and early 2009, Tepper started buying. He bought the distressed debt of the very banks at the heart of the crisis. He bought senior debt in Bank of America, Citigroup. These were securities that were trading for shockingly low prices. Some were priced as if the banks were headed for complete liquidation. He also bought preferred stock in these institutions. The market thought these assets were worthless. Tepper believed they were deeply undervalued. He calculated that even if the common stock was wiped out, the debt he was buying was secure. It was a complex, high-stakes gamble on the survival of the American financial system. He poured billions of dollars into these beaten-down financial securities. The market continued to fall. For a time, his positions were losing money. The pressure was immense. Lesser investors would have folded. They would have sold to cut their losses. Tepper held firm. He trusted his research. He trusted his conviction. He believed the government's rescue programs, like the Troubled Asset Relief Program, would ultimately work. He just had to wait for the panic to subside and for sanity to return to the market. His patience paid off spectacularly. As the government's interventions began to stabilize the system, confidence slowly returned. The prices of the bank bonds and stocks that Tepper had bought began to soar. The debt he bought for 60 cents on the dollar went back to par, or 100 cents. The preferred stocks he bought for pennies rallied dramatically. By the end of 2009, Appaloosa's main fund was up about 130%. Tepper's personal earnings for that year were an estimated $4 billion. It was one of the greatest trades in Wall Street history. It transformed him from a successful hedge fund manager into a financial legend. His masterstroke was a lesson in courage and clarity in the face of chaos. His story is more than just numbers on a balance sheet. It is about a mindset. It is about a philosophy of investing that is both simple and profoundly difficult to execute. He famously keeps a pair of brass testicles on his desk, a gift from former employees. It is a crude but effective symbol of his investment style. It represents the courage required to buy when everyone else is selling. It is the audacity to stand firm when the winds of fear are howling. This is not just a tale of getting rich. It is a guide to thinking differently, to acting decisively, and to understanding the deep psychology that drives financial markets. From a working-class neighborhood in Pittsburgh to the pinnacle of global finance, Tepper's rise is remarkable. It demonstrates that, in the world of money, background matters less than foresight. It shows that conviction can be more powerful than consensus. The timeline of his career is dotted with moments that would have broken lesser investors. The Russian debt crisis, the dot-com bubble bursting, the subprime mortgage meltdown. For Tepper, these were not obstacles. They were opportunities, laid out for those brave enough to seize them. His journey is a powerful lesson in turning crisis into cash. David Tepper is not an academic who speaks in complex theories. His financial advice is direct. It is practical. It comes from decades of experience in the trenches of the market. One of his most important principles is simple. Have cash on hand. He believes that cash gives you power. When markets are in turmoil and asset prices are falling, cash is your weapon. It allows you to buy opportunities when everyone else is forced to sell. Holding cash means you are not fully invested at the top of the market. It might feel like you are missing out, but it prepares you to strike when the best deals appear. Another key lesson is to embrace volatility. Most people fear market swings. They see a falling market and they panic. Tepper sees it differently. He sees volatility as a friend. It creates dislocations. It causes assets to be mispriced. He once said, "The worse a situation gets, the higher the probability it gets better." This mindset is the core of his contrarian strategy. He actively looks for situations that scare other investors away. Company scandal. National economic crisis. He believes moments of maximum fear often present moments of maximum opportunity. Be prepared to buy when there is blood in the streets. Tepper also teaches the importance of doing your homework. His big bets are not wild gambles. They are deeply researched, calculated risks. Before buying the debt of a distressed company, his team pores over every detail of its finances. Assets, liabilities, legal situation in a bankruptcy. This deep knowledge gives him the confidence to act when others are frozen with indecision. The lesson for the average person is clear. Do not invest in something you do not understand. Take the time to learn. Read the reports. Know what you own and why you own it. Confidence comes from competence. Finally, Tepper's career shows the value of learning from your mistakes. Not every trade he made was a winner. He has had losses. The key is that he does not let ego get in the way. If a trade is not working and his original thesis is proven wrong, he is not afraid to change his mind and sell. He learns from the error and moves on. This flexibility is crucial. Being stubborn can be fatal in investing. The market does not care about your opinion. You have to be willing to admit you are wrong, cut your losses, and wait for the next opportunity. This blend of courage and humility is a hallmark of his enduring success. David Tepper's empire extends far beyond the trading floor of Appaloosa Management. While the hedge fund remains the engine of his wealth, his success has allowed him to acquire a diverse portfolio of high-profile assets. The most prominent of these is his ownership of sports teams. In 2018, he made headlines purchasing the Carolina Panthers. The price tag was a record-breaking $2,275 million. This was not just a vanity purchase. Tepper saw it as a major business investment with significant growth potential in media rights, real estate development, and branding. He is known as an active, hands-on owner. His sports ambitions did not stop with football. He also brought a Major League Soccer team to Charlotte. In 2019, he secured an expansion franchise, Charlotte FC, which began play in 2022. This move was part of a larger vision to turn Charlotte into a sports and entertainment hub. He is investing heavily in renovating the stadium and developing the surrounding area. These teams are more than just assets on a spreadsheet. They are major civic institutions. His ownership places him in a powerful position of public influence, far different from the private world of hedge funds. He is shaping the culture and economy of an entire city. Philanthropy is another major pillar of his public life. He has given away hundreds of millions of dollars, much of it focused on education. His largest and most famous gift was a $55 million donation to his alma mater, Carnegie Mellon University. The business school was renamed the Tepper School of Business in his honor. He has also given substantial sums to the University of Pittsburgh and other educational and charitable causes. These donations are not just about giving back. They are strategic investments in building a lasting legacy. They ensure that the Tepper name will be associated with education and opportunity for generations to come. David Tepper's place in the history of finance is secure. He is one of the greatest hedge fund managers of his generation. His story is a powerful testament to the American dream. A boy from a middle-class family in Pittsburgh rose to the absolute top of the financial world. He did it not through inheritance or connections, but through intellect, hard work, and an extraordinary amount of courage. His legacy is not just the billions he has made. It is the blueprint he created for how to succeed by thinking differently. He showed that the biggest rewards often go to those who are willing to stand alone against the crowd. His impact is most clearly seen in his contrarian philosophy. He perfected the art of investing in distress. When markets were at their most fearful, he was at his most aggressive. His monumental trade during the 2008 financial crisis will be studied in business schools for decades. It was a masterclass in seeing value where others saw only ruin. This approach has influenced a generation of investors who now look for opportunities in crisis. He proved that with deep research and strong conviction, it is possible to make a fortune by betting on recovery when the world has given up hope. What can the average person learn from David Tepper? You do not need to manage a multi-billion-dollar hedge fund to apply his principles. The core lessons are universal. Save your money so you have cash ready for opportunities, whether it is a stock market dip or a good deal on a car. Do your homework before making any big financial decision. Do not follow the herd. Learn to think for yourself. And have the courage to act on your convictions, even when it feels uncomfortable. These are not just investing rules. They are rules for life. They are about being prepared, being disciplined, and being brave. Ultimately, David Tepper's story is one of bold conviction. It is about trusting your analysis more than you trust the noise of the market. It is about having the nerve to buy when every instinct tells you to sell. He built an empire of cash, stocks, and sports teams. From the trading desk at Goldman Sachs to the owner's box at an NFL stadium, his journey has been defined by a willingness to take calculated risks that others were too afraid to consider. His legacy is a powerful reminder that in finance, as in life, fortune favors the brave.